Kick us off.
Banani Molweni, good evening. Goeienaand. It's so lovely to be here tonight. My name is Veline Holness, and I am an associate professor at the School of Law at the University of KwaZulu-Natal. I'm a middle-aged woman with short blonde hair, and I'm wearing spectacles and hearing aids. This is a way in which we introduce ourselves to visually impaired persons to make sure that we can include them as well. So when our speakers introduce themselves, if they can please also indicate what they look like. I'm wearing a lovely white jumper with a couple of pretend pearls. So persons with disabilities incur significant expenses to manage their impairment, and families supporting persons with disabilities similarly incur massive expenses to ensure meaningful participation in all aspects of life. We know that out-of-pocket expenses range dramatically depending on your disability, your age-related needs, and the support you may require to manage your disability. And tax rebates is one way in which we can capitalize on state support to mitigate some of this financial impact. Disability-related expenses may qualify for a rebate if it is necessary because of the disability and directly relates to managing, supporting, or accommodating that disability. It is a fallacy, of course, that only medical expenses are eligible for this kind of support. There are many other disability-related expenses which may also be covered, and the experts we have put together this evening for you has a wealth of information on all those kinds of expenses that qualify. From education and learning supports to assessments, therapeutic supports, transport costs, caregiver supports like personal assistance, assistive devices, and modifications and adaptations to your home and your vehicles. Financial and legal empowerment for persons with disabilities and their families is vital to ensure that they can receive the necessary state support towards these kinds of expenses. So what kind of policy and laws do we have in place that support this notion? We have the white paper on the rights of persons with disabilities, which recognizes the challenge with the current taxation system, that it's linked to the tax bracket of an individual, rather than an equitable rebate for the actual expense of the disability-related cost incurred. And we have a brand new proposed promotion and protection of persons with disabilities bill, which advances in one of its clauses that the state must reimburse or compensate a person who performs any obligations assigned to the state by providing tax relief and incentives, and grants and subsidies to donors and caregivers. So there is hope of this new bill further cementing this legal right to the tax support that we might need. And then, of course, we know that this opportunity accurately promotes an adequate standard of living for persons with disabilities in line with our obligations under the United Nations Convention on the Rights of Persons with Disabilities and our homegrown African Disability Protocol. The latter emphasizes that the state should put in place financial measures to cover disability-related expenses, including through the use of tax exemptions or concessions, cash transfers, duty waivers, and other subsidies. So we are here today not to learn about the law in any way or form, but to learn about the practicalities of how you can go about to secure your tax refunds. And I am on behalf of Zagiga NPO, great friends of mine who do a lot to ensure empowerment of persons with disabilities at grassroots levels, working very closely with important stakeholders throughout the municipality and our province, and of course with Stratfin now also across the nation. I would like to welcome stakeholders from eThekwini Municipality, the KwaZulu-Natal Department of Social Development, our disability sector stakeholders, community leaders, our program partners, and then very much a warm welcome to all of our participants, persons with disabilities, parents, caregivers, and members of the public who have joined us this evening. Welcome and thank you for joining us.
Okay, that was great. I'd like to greet everybody. My name is Mr. Benjamin Mangoba Makosini Nkosi. I'm currently the company manager of Zagiga NPO under the leadership of Mr. Sipiwe Dlamini, who is currently the chairperson of the Disability Forum in the Tegwini municipality in the south. And who also is an advocate for disability rights throughout the country. Well, us at Zagiga, we represent the grassroots levels, whereby we go deep into where people need help, and then we try and develop strategies and partnerships that will eventually lead to their well-being. Today, we are all gathered here because of these strides that we are making to make it an easier time to live as a person with disabilities. What we want actually to give to our participants today is the knowledge that we cannot give you in the grassroots level because at the grassroots level there's still a lot of development that needs to happen. So I'm glad and I appreciate the opportunity to also be added as one of the speakers of this great initiative. As a person who's been doing a lot of initiatives, as the professor has been saying in Durban, we would like to hand over to the bosses. I mean, the experts.
Thank you so much, Benjamin. And Prof, thanks for teaching me something new. And yeah, what I learned from you was sensitivity. And I'm going to start with introducing who I am by how I look. So I'm a middle-aged person, although look much younger, 10 years younger than I am. It's a good thing I haven't shaved tonight. So just to bring a bit of attention to that. And a parent of three children. I'm wearing spectacles, short black hair. I would be short, but that's irrelevant because no one can see how short I am or not short I am because I am sitting and this is a online webinar. There's always a plus to an online webinar, although I do prefer in-person webinars. Okay, so just to kick off us, I just want to thank Professor and thank Benjamin and the whole Zagiga organization. It's such a privilege to work with people who have sensitivity, who care, and just really want the best for fellow South Africans, and especially fellow South Africans which are navigating disabilities and other challenges in their life. And the challenges that come with disability are far greater than I could ever fathom. And, and if I can just add a little bit of value in one small area of disability, and that's the financial part of it, and that's a huge privilege for me. So thank you so much for giving me the opportunity to talk. I'm the managing director at Stratfin. Ilan Rabinowitz will be doing the Q&A. He's the founder and CEO at Stratfin. And yeah, it's something we're really passionate about because, like I say, we can't comment on in many or most areas of disability, but on the financial tax side of it, that's something which we very close to our heart, and we're excited to share our knowledge on tonight. Also, want to thank my colleague Yehuda who put this together with Benjamin. So thank you guys very much. Tonight's topic: stop missing out on medical tax refunds. And the reason why I call it this, named the webinar Stop Missing Out, is because I've seen how many families are unfamiliar with this tax law and thereby missing out on medical tax refunds, which are available. And tonight we're going to discuss what can be claimed, who qualifies, and how at Stratfin we help families claim these additional medical rebates that are available. Also important to note, the timing is impeccable because most South Africans, or I should say, a big part of our nation has been auto-assessed in the last week or so, or being auto-assessed, and tax return season is opening up on Monday, so it really is good timing. Although we are going to find out tonight that irrespective of the timing, at Stratfin, we've worked out how to do a backdated claim, and therefore we can help people any time of year, but obviously it is better during tax season. Just a little bit about Stratfin. So we're a tax solution company. We've got a couple really creative angles when it comes to tax for businesses in payroll and in individual tax. The most attractive solution is a solution we're going to be talking about tonight, and that's the medical TaxBack. And most of our solutions we do on success. We really back our capabilities in navigating them, and there's no upfront cost. So you're welcome to engage with anyone on our team at no cost, and if there is a benefit, only then would one see an invoice. Also important to note that tonight's an info webinar, and obviously we're going to talk about how we help clients, how we help our clients at Stratfin, but it's an info webinar. There's no obligation to work with us. Take the information, and the appeal I can make to all of you tonight is do something with the information, whether you use our company, whether you use any other company or your own accountant or do it yourself, do something, because we don't know how long medical rebates are going to be around. There's a lot of talk about nationalizing government health, and the first thing that's going to go is the rebates on the medical aids. So it's really important to maximize while the opportunity is there. I'm going to go into a little bit of theory of how the Medical Rebate Tax Act has been set up, and then I'm going to go into the practical part. If you do lose me in the theory, not to worry, the take-homes will be very, very clear. So the theory behind it is as follows. As a taxpayer in South Africa, SARS give back to the families some of those expenses, some of that earnings that went towards medical expenses. And how it works is it's broken up into two sections, your Section 6A and your Section 6B in your Income Tax Act. Your Section 6A is a very, very straightforward, not complex formula. The way it works is that per member that's on a medical aid, one gets roughly around 350 Rand back, or sorry, 342 Rand, and then if the more members you have, it drops to about 240. So to round it off, it's around 300 Rand per member that one has on the medical aid. So take a family of four. Every month that family has got four members on a medical aid, they'll get back 1,200 Rand when they do their tax return, a total of roughly 14,000 Rand when they do the tax return. So that's 4 times 300 is 1,200 times 12 for the 12 months of the year. They'll get back about 14,000 Rand. Then what happens in your Section 6B? This is where it gets very, very complicated in the formula. We are gonna simplify it tonight, but the formula that SARS applies is quite complex, because what they do is they give you back a percentage of your total medical spend that appears on your medical aid tax certificate. What I mean by that is every single person, every South African taxpayer who is on a medical aid, the medical aid will, at the end of the financial year, put together a medical aid tax certificate. And that is a certificate of how much money did you as a family spend on your medical expenses, both what you paid your medical aid monthly contribution, as well as your out-of-pocket expenses, which the medical aid do not cover. And then I'll give you a percentage of that back. Now, that percentage is called the 25% percentage, although what's important to note is that it's not exactly 25, because the higher income bracket you are, the lower the percentage you get back. So you can have some income earners which are getting nothing back in their Section 6B, and you can get some taxpayers which are getting back up to 25%. It's not exactly 25% because it's 25% after your Section 6A. Sorry for the complexity there. Bottom line is that you're getting back a percentage. And being that that's the case, it's so important to always submit everything to your medical aid. So for example, for my family, We were a family of five. We pay about 8,000 Rand to medical aid. We're on a hospital plan, and the medical aid covers almost nothing. But what I always tell my wife is please always submit everything to the medical aid. Today we're at the dentist. It costed us a fortune of money. Two kids at the filling, one kid at the checkup. You know how it goes. And the medical aid is not covering anything. But my wife submitted that to the medical aid. And the medical aid is now acting as my personal financial logbook on medical expenses. And they will deliver that certificate to SARS and say, and SARS will then see, oh, the Blumno family spent 8,000 Rand times 12, that's around 100,000 Rand per year, plus another 4,000 Rand in June, plus another 2,000 Rand for the speech therapist every month, and 1,000 Rand for the occupational therapist, etc., etc. And then they'll give me back a percentage of that spend. So already at this point, and we haven't yet discussed how disabilities impacts medical rebates. All we've discussed is what's the medical rebates, the standard medical rebate that every South African is entitled to. Make sure you're getting it. And I want to mention three take homes before we go into disability rebates and how disability completely changes the game when it comes to medical rebates. And the first take home is always submit everything to your medical aid. Reason being is because your medical aid will then have that on your medical aid tax certificate, and you'll get a percentage of that back. If you're not on a medical aid, still very important to keep all your receipts, all your statements of accounts from all the medical professionals that you've spent money at, and submit that to SARS when you do your tax return. So my point over here is that keep all your medical records of all your spend. Easiest way to do it if you're on a medical aid is submitting it to the medical aid. If you're not on a medical aid, make sure to keep it. Maybe email it to yourself. Keep it in a certain folder, but look after that because that can get you back a significant amount of money. Second take home is so if you're a taxpayer and you're paying for your parents' medical aid or your child's medical aid, even if they're the main member of their own medical aid, so you have a child who's over 21, but you are paying for them, or a parent, they're not on your medical aid, SARS will still honor that and will give you back a percentage of that. And that's why it's very, very important to make sure that all your medical spend, even if it's not directly for your family, but you've spent it for your parents or your children, make sure that you submit that as well to SARS. And lastly, just ensure when you don't trust an auto assessment, don't trust the tax return. Make sure that you see there in your tax return, in your auto assessment, what you got for your medical credit, and it's your right, and something which I highly encourage to make to educate yourself in the space of tax, at least to the point where you know what's happening in your own tax return or your own auto assessment. Okay, and if you need to clarify that, you're welcome to speak to anyone on my team. We'll be happy to clarify it for you with pleasure. We've got a team of about 20 of us who work in the back office, all very knowledgeable in this space and very happy to help. Now we get to the exciting part of the webinar. And what we first going to discuss is what medical conditions SARS recognize as a disability, and at what extent are they then considered a disability for SARS. So, and then we're going to get into when there's one person in the family who's navigating one of these medical conditions in one of these six categories, what then happens on the financial side, which is then even more exciting. Okay, so the first category that SARS have is the intellectual category. Here you have all the remedial students, those struggling with dyslexia, those struggling with neurodiversity, and all the limitations that come into learning challenges. Second one, vision. Vision is quite a hard one to qualify on. Obviously, there's degrees in vision impairments. SARS's basic rule is you need to be affected moderately to severely, even after your maximum rectification, which means you've gotten your best pair of glasses, you've been to an optometrist, and you still are limited in your vision. It does make a difference if it's one eye or both eyes. Once again, I can't comment exactly. I'm not an optometrist, but important to clarify that and confirm with your optometrist whether you do meet the criteria or not, if applicable. Communication. Here you have all people struggling with apraxia, non-verbal, children or adults, and even someone who's got like a moderate to severe lisp, and it's now affecting them in their daily communication. They're avoiding talking up in meetings. They can't express themselves the way they should. Any limitation in your communication that's limiting you in your day-to-day life, whether occupationally or at school or socially, that will be fall under a communication impairment or disability and would be a qualifying condition. Physical, here you obviously have all the mobility issues. So I was even say even if one is able to walk but without assistive, even if one is able to walk without assistive devices, but with a degree of difficulty or can't walk long distances, that would qualify. What's also people miss over here is those struggling with sleep apnea, those struggling with cancer, or any other physical limitation in your day-to-day life that's affecting a person would qualify under the physical category. In the mental health, okay, we have anxiety, depression, ADHD. These are definitely um, conditions which can meet the SARS criteria. Once again, as mentioned, SARS are asking, does it affect you in your moderately to severely in your day-to-day life, whether socially or occupationally or at school? So not every case of anxiety is a disability or an impairment. If it's a moderate to severe, that would then qualify as a disability or impairment. And lastly, hearing loss. Once again, it doesn't need to be a severe case of hearing loss. Even if someone um, is walking around, is in need of a hearing aid or should or would do better with a hearing aid. Once again, it needs to be clarified the exact line of what does qualify with an audiologist. But what's important to note is that it's not a severe case of hearing loss that could qualify a person, even a minor hearing loss, and it does once again depend if it's both ears or one ear, the age of the person. If it's a child, then SARS honor it, even if it's very, very minor hearing loss. And once again, it can be clarified by an audiologist. Okay, so now that we know our 6 categories, and really what I tell families is that any medical condition most likely will fall under sorry, let me just say that again. Any medical condition affecting a person moderately to severely in their day-to-day life, even after they've done the rectification, they've been to the doctor, and they are being affected, that would most likely fall under one of these 6 categories, and then this unlocks massive opportunities when you're doing your tax return. And what happens is as follows. The first thing that happens is that we previously spoke about the 25% formula, which SARS give you much less for the higher income earners. So the first thing that happens is as follows. When there's a medical condition, even with one person in the family, so say the spouse is suffering from anxiety, or one of the children have got learning difficulty, or the taxpayer has got an issue with mobility, any one of those 6 categories, and there's one person in the family navigating one of those medical conditions, SARS will now give you a 33% flat formula and does not discriminate against high earners. So irrespective of how much you earn, you will get 33% back. And um, and the other thing that's happening is that you're getting 33% back as opposed to the other formula, which normally works out to be about 10% back. So you're already unlocking a lot of money just on the Medicaid contribution and all the expenses which are showing on your Medicaid tax certificate. And to give just to give an example to make it a little bit practical, say you have a family that's spending, and I'm going to keep numbers round. Say you have a family that's spending 5,000 Rand per month on a medical aid. So that's 60,000 Rand for the year and an additional 3,000 Rand in the out-of-pocket medical expenses. So that takes us to 96,000 Rand. Instead of getting back 10,000 Rand, 12,000 Rand in the medical aid, uh, in the medical aid rebate, they'll now get back 33% of that, taking them to roughly 32,000 Rand, which is a massive jump already. The second thing that happens is if the person is if the person with the impairment is at a school, a remedial school, or at a facility, or at a home, or any expense that normally doesn't isn't viewed as a medical expense. School fees is never viewed as a medical expense. But if that school fee or the home or uh, the institution that's looking after the person with a disability is is coming at an additional cost to what a regular child at school would cost. SARS will now give you back 33% of all of those expenses. So let's just give an example. Taking the same family, you spent 96,000 Rand on their medical spend. They now have a child at a remedial school, and the remedial school is 6,000 Rand. A school down the road is 1,000 Rand a month. The remedial school is 6,000 Rand a month. SARS will now say, okay, 5,000 Rand of that has been incurred because of uh, an impairment, and now SARS will now honor that with 33% back of that entire school of the 5,000 Rand additional spend every single month, which will now take you to the additional money that was spent was 60,000 Rand. SARS will now give you back 33% of that, which knocks you up a further 20,000 Rand when you're now doing your tax return. Similarly, travel, if travel for due to the impairment is a significant travel. So, for example, I recently helped a client who was traveling from Pretoria to the Johannesburg Cochlear Implant Center twice a week for about a full year. And obviously, that's a very significant travel. All that travel is viewed as a medical spend, and you can get back 33% of the AA rate of that travel. So you take the vehicle, you go into the AA website, you work out what the AA rate is for that vehicle, and you can now get back 33% of all that travel, which is really can knock you up a further 10,000 Rand. And then lastly, we already mentioned all the out-of-pocket expenses, but besides the out-of-pocket expenses, if the family has got a carer or is need of doing home renovations or any other medical spend, any other financial spend that's linked to the medical condition or to the impairment, SARS will honor that as a medical spend and you'll get back 33% of that. We're currently helping someone who had to redo their garage at a massive cost. Another example, I was speaking to a mom yesterday who's got a daughter with who needs a back brace that's costing about 50,000 Rand. There's so many there's so many expenses which we generally aren't covered by medical aids, and one often thinks, okay, I can't even get this device because it's too costly, and knowing that there is a 33% rebate on that, it really changes the game when you're trying to give your loved one or yourself the best medical care that's so needed for the disabled and impaired communities. So in total, it's very hard to know the total of what can be claimed back. But if I can just summarize this point with the following message and say is there's so many of the expenses that we incur can be claimed back at 33%. And when you go through it thoroughly and claim back all that spend, you can really be surprised at how much money can be claimed back. And obviously, it's important to note you can never claim back more money than the tax that you've paid. So if you've only um, if you've only paid over the year, say 20,000 rand in tax, you can never claim back more than 20,000 rand. You can, because this is a tax rebate. But in many cases, if one follows the exact rules, one can claim back the entire PAYE, which means over the year your company's been paying, you've been earning a salary of say 25,000 rand. Every month in your account you're only receiving 21,000 rand, and you've just spent 48,000 rand on SARS, and you can now claim back that entire 48,000 rand if you follow this protocol and claim back all of those additional medical spend. So yeah, I can't tell you exactly what you will get back. Obviously, if we looked at every case, we could do an exact calculation. But as a rule of thumb, the message is that there's a significant amount that can be claimed back, and we just really encourage people to take advantage of this opportunity whilst it's there. At Stratfin, we very, very passionate about the space. We're helping about 100 new families every single month. And well, because we've taken that time to really specialize in disability tax, we've worked out different ways to maximize these rebates. And the first thing that we do is we do a backdated claim. So when we've got a family which comes forward and they've got a child with autism, I know they know autism didn't appear in January 2026 when the child got to grade one. The child was born with autism. Surely the parents have been incurring a lot of expenses, and we can now go back 3 years and claim back 33% of the entire family's medical aid, the entire, all the out-of-pocket expenses, and just that within the first within the first 6 to 8 weeks of engagement with us, we do a 3-year backdated claim, and this we can do any time of year, and we're recovering tens of thousands of rands for families. So that's the first thing we do. The next thing we do is we have a holistic approach. So uh, we will never just do a claim in the one spouse's name without knowing the full family picture. We always want to know what's mom earning, what's dad earning, who's the main member of the medical aid, who's paying for the school fees, who's paying at the doctor bills, and then what we'll do is we'll do the claim and wherever we'll get the more favorable outcome. In many cases, um, we've actually done a little bit of open heart surgery, and we undo what was done in the one spouse's name and then put in the other spouse's name, and we really know our game in how to maximize this rebate and make sure that we're doing it in the spouse that will get the more favorable outcome. And sometimes we'll split it. We'll do school fees in the dad's name, medical aid in the mom's name, just to get the maximum amount that can be claimed back. And lastly, because the process is very daunting, especially for those who aren't great at admin, myself included. Um, and and especially for those families which are already navigating so much in their life, they're already navigating family members with different impairments, disabilities, neurodiversity, and to now have to think about all the admin that goes into these claims, getting that SARS form signed by a professional, which professional will, which professional should sign it off, which professional will be accepted by SARS, and then helping find all the out-of-pocket expenses which weren't submitted to the medical aid, and all the ins and outs of getting that full stack of documents together. So when it arrives on SARS's desk, it will go through first time, um, because that can be very challenging. What we do is we assign a client manager to every one of our clients, and that client manager is there to hold your hand through the process and really take what is a massive admin headache, and we do 90% of it in office, 10% which we can't do. We guide you exactly on what needs to be done, and then from there we'll hand it over to an account manager who's then mandated to play ping pong with SARS and get it over the line. Obviously, we review all the documents before it goes on before it arrives on SARS's desk to make sure that it should go over first time. But if it doesn't get over the line first time, we'll just keep batting until we get that over the line. So that's what we're good at. That's what we're passionate about. And as mentioned, if we can even contribute in a very small way to the disabled community, it's a great privilege for us. We're happy to engage with anyone, even if you just have questions, just want guidance. Um, there will be a WhatsApp which will go out afterwards, which you can communicate on. Follow the prompts there if you would like assistance, or otherwise get a hold of anyone on our team. We're all very happy to help, very knowledgeable in the space. And yeah, if you'd like us to do the claim, we're happy to do it for you. As mentioned, we do it on success. So we'll only invoice you if we have a successful claim, and our invoice structure works 20% of success. So if we manage to claim 50,000 Rand for a client, we'll invoice 10,000 and the client will keep 40,000. So it's an 80-20 split. Also important to note that we we know how to do it in a way that doesn't trigger an audit. Obviously, people are very nervous when doing claims against SARS and you worry that you're going to go under the spotlight. We know how to do it that does not trigger any audits. We've done hundreds and hundreds of families. It's never triggered an audit, and we really specialize in the space and we know how to do it that way. And lastly, if you do have an accountant or tax practitioner that you're already working with, it's not a problem at all. We're happy to work alongside your accountant, alongside your tax practitioner, and just get the disability part of that tax return done correctly. So yeah, that's it from me. I'm gonna check the Q&A and yeah, please do share. I just want to mention before we start the Q&A, we're not going to get to all the questions, but as mentioned, you're welcome to engage on that WhatsApp line, and someone on the team will definitely assist you. So I do apologize in advance that we're not going to get to all the questions. I'm going to skip through some questions and just try to pick out the most relevant to uh, majority of the crowd. Thank you everyone for allowing me to share this knowledge that I'm so passionate about. Okay, Ilan, are we ready?
We're ready, Dobby.
Great. I'm not ready. I just still need to look at the questions. Give me one seckie. Okie dokes. Ilan, if someone's on a hospital plan, can they still claim back for their, assuming there's an impairment in the family, can they still claim back on that?
So, as Dobby discussed, there are two sections of the medical claim. One is if you are on a medical aid, and one is if you're on a medical aid or if you're not on a medical aid. So certainly if you're on a medical aid and you're on a hospital plan, you can claim back. And even if you're not on a medical aid and there's somebody in your family who has an impairment or disability, you can still certainly claim the medical expenses in your tax return and get a medical tax credit back for them if you qualify. So definitely, let's try. Let's put that claim in for you, and hopefully it will be successful.
Amazing. Ilan, how far back can we go when doing backdated
Good
claims?
question. So the rule at SARS is that we can, let's say, reopen tax returns up to 3 years from their date of assessment or final assessment. So if a tax return was assessed today on the 9th of the 7th, 2026, we can still open that tax return 3 years from now. Or another way of viewing it is any tax return that was assessed in 2023 07 10. Okay, 3 years ago, that tax return, we can go and reopen it and claim from SARS. So that would probably, and that could be several tax returns. It could be a 2021, 22, 23, depending on when you last submitted your tax return. So any tax return that was assessed from 2023, 07, 09, those tax returns, we can attend to those for you.
Amazing. Ilan, question, if your employer is paying part of the school fees or paying part of the medical aid, can you still get a rebate on those expenses?
Okay, so it's slightly tricky. If your employer is paying any of those expenses, um, it depends. If those expenses are forming part of your cost to company package and you taxed on them, it's as if you are paying for them and you can claim them. If they're paying for it because it's like a form of a donation or a goodwill amount, then that's an amount that you're not paying for yourself. So if you're not paying for it yourself, then you can't claim it. You can't claim for something that you haven't paid for. So speak to our team and we'll be able to assess and work out exactly what you can claim for and what you can't claim for, and we will maximize what you're allowed to claim for in your claim to SARS.
Thank you. Ilan, this is a great question. What if someone has a broken foot? So it seems to be a temporary disability. At what point is a temporary disability considered to be severe enough to claim back for disability?
Excellent question. So the definition of a disability from a SARS perspective has three requirements. Number one, it has to be moderate to severe. Okay, so like a mild disability will not qualify. Second thing is that it has to um, have a prognosis that will last for longer than a year. Okay, so if a broken foot is only going to last for 6 months, then that won't form part of a disability. And then the third requirement is that a doctor or somebody who is qualified to make an assessment has assessed that this disability um, affects you on a day-to-day basis. So those are already and has actually written this down and confirmed it in a specific document that we need to submit to SARS. And those are, it seems, the three requirements. So in terms of your question, Dobby, if the condition is not going to, the prognosis is that it's not going to last for longer than 12 months, then it won't meet that particular criteria.
Great, thank you. Ilan, is there an age limit to this rebate? People are mentioning that there's something about being 65 years old. How does that work? Maybe you can elaborate on that.
Good. There isn't an age limit, but it's a positive age limit, and the reason is that generally, if you're under the age of 65, then you have to have this particular diagnosis has to last for the 12 months, etc., and has to be confirmed on the particular form, and that's when you'll get the higher rebate from SARS, the 33%. Um, if you reach the age of 65 and you're the main member of the medical aid, then you automatically get that higher rebate, that 33% for medical expenses. So it is important, and it could be maybe not all the medical expenses. You may still need to show or have the particular form and may need to be diagnosed if there are additional medical expenses. But certainly your medical aid and your out-of-pocket medical expenses will attract the higher benefit if the main member is over the age of 65.
Okay, thank you. Benjamin, from your side, is there anything that you feel I may have left out or something you would like to contribute?
I feel like as the experts have spoken, I feel like everybody who joined, we've learned a lot. I feel like now it's up to us, you guys up there at the top, and us down here to actually collaborate and actually help more families access the service. But it's a great
Amazing.
service, according to me. And I'm getting a lot of my constituency actually saying they're happy about this webinar. We just wish that we could have more webinars, maybe, in Etekwini, and maybe I could actually do more to get people more aware of things like webinars because you might be surprised, Dovi. Not a lot of people are clued up to how to even meet online. But thank you for this opportunity that you gave us, and please bring us more services like this to KZN.
Thank you so much, Benjamin. Really, really appreciate you putting this together. Ilan, I think that's it. Anything that is relevant, a common question that we often get asked, Ilan?
I think that many people can't do it. Maybe they even try to do it themselves, and it is very difficult to get it right. And I highly suggest being in touch with Dobby and his expert team. There's a lot of pitfalls, hey, is the correct words when trying to do it. And I think you really need somebody who's expert and knows exactly how to do it in order to be successful. It doesn't cost that much, and they only charge you if they're successful. And I highly recommend that you be in touch with the team, make an appointment. There's no obligation. Remember, there's no charge unless they're successful. And I think you will gain more than certainly the cost that it will be. And I think that you'll be very surprised what you'll be able to get. So I really highly encourage you to take this opportunity and make use of the Stratfin team.
Amazing. Good.
Yes.
I just see that Yoda's calling me. Let me just see if there's Yoda, we wrapping up the webinar. Anything specific you would like me to include? Okay. Okay, good, good, good. So that was Yehuda who put the webinar together. So just checking that there's nothing from his side. Thank you, parents. Those of you who are sleeping children, wishing you a wonderful night. Those of you whose children are still awake, wishing you good luck. And yeah, have a great weekend.
Thank you very much, Toby.
Well, bye bye.
Thank you, thank you. Cheers, 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 cheers. Bye, bye, bye.